This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday, thank God. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, morning.
Hi, morning, guys. This morning when I woke up, my son just asked me, Papa, it's raining enough today? I said, no, it's not.
Schools are open, so it's time to go. But what a spell we've had, right? Absolutely continuous. And I think there's something to talk about over there. I don't want to start off on a somber note because it's Friday, but yeah, I think on the agri side, there are a lot of questions already being raised on the next cycle, the next crop cycle, with the kind of incessant rainfall that we've had. But it's Friday, so
for now, I'm looking for the sun, Surabhi. I mean, just the sight of the sun. I think it just lifts your spirits, right?
Yeah.
Been missing for the last 1 month or so. So let's hopefully today is the day. Anyway, we'll talk about the weather as we go along, but let's quickly tell you what you need to know as we start another trading session. And it's a somber start this morning. And for a bunch of reasons. Things seem to be getting a little complicated. And I'll tell you why. First is the US market reversal that we saw. The markets were cruising along nicely, the main big US indices. And mid-afternoon or so, they started selling off. And it was that's why I'm saying it's a big major reversal. And especially, pointing to the fact that we reversed from fresh 52-week highs. So that's not a good sign, never a good sign. Now, the changes will come up on your screen. The S&P down about 0.64%, the Nasdaq 0.5%, Dow was down about 0.6% as well. For the Dow, it basically finally broke those 13-day winning streak. The 10-year, actually the cue or the trigger for the stock sell-off did not come from, stocks. Earnings, etc. were okay. But it came from the Treasury market, yield market. The US 10-year yield shot up 13 basis points to 4%. Consequently, the dollar also reacted. The dollar was up and it's back above the 101.5 level. It left off at 101.67. The trigger is this. Nikkei, which is a Japanese newspaper, it basically said that the Bank of Japan is going to discuss allowing long-term interest rates in that economy to rise above the 0.5% curve, what you call YCC, yield curve control. So basically, they're now talking about, the newspaper at least is suggesting that the Bank of Japan will get out of its trying to control the yield curve, trying to control interest rates, trying to keep it low. And that really triggered the move. We never really stopped. So yields were going higher on the back of strong data, which we can talk about later. And this particular news item, which is out of the Bank of Japan, that further pushed yields higher. And that's why you saw that 13 basis point higher close. Now, Bank of Japan is one of the last central banks, is the last major central bank, without a doubt, which is still in, a monetary expansion phase. Even though inflation is back after almost 30 years in Japan, the Bank of Japan, because it's been so expansionary for so long, at least 10 years, it's found it hard to take its foot off the pedal in terms of monetary expansion, easy monetary policy. If this were to happen today, the Bank of Japan meeting is today, I think it'll mark a significant shift. They can't do everything together. I mean, it's impossible. It'll be a slow start, but the direction then will be clear. So that's the reason why I'm saying that perhaps the meeting today and what comes of it, if that newspaper report is correct, markets paid attention to it, but we'll know shortly whether it is correct or not when we get that Bank of Japan decision. Okay, so that's, the global stuff, which will be important to track. Because markets have done so well. Everywhere markets have done so well, and sometimes it requires a trigger, one way or the other. For the Nifty, just to kind of get it down to levels, the support is 19,620. The same number we've been pointing for the last couple of days. Yesterday, we broke it intraday very briefly, and then we bounced nicely above it. The 20-day, I think, will also perhaps come into focus, which is at 19,555. It must not break for the up move to sustain. Remember, since we started this rally on the 31st of March this year, since April basically, the Nifty is not closed below the 20-day moving average. That number now is at 19,555. So hopefully that holds. Now, the Bank Nifty support comes in at its 20-day moving average, which stands at 45,300. and 33. So, again, not very far away from where we are. So we'll have to watch this closely. The implied open on the Nifty, the GIFT Nifty is indicative of a lower start, some 70-point lower start. Surbhi.
Okay, so that's some red to begin with. And Prashant, like you're saying, I guess everyone did sort of take note of that halt that we had in US markets. It was, I think, a 13 consecutive days of rise, which finally came to a halt. So we watch out for that. By the way, in the US, we'll get the PCE numbers as well. And that's the inflation metric that the Fed really likes to track very, very closely. Core PCE is expected to go up just about 0.2% month on month. So again, Fed watchers will go back to looking at that number to see if they're really done with this last 25 basis points rate hike or not. The ECB went ahead and did a 25 basis points rate hike yesterday, and that was well digested, at least by the European markets. So central banks are doing what they have to. By the way, oil has been grinding higher throughout this week. This morning, prices are slightly lower. Brent is down about 0.5% right now. But for the week, the gain is 5%. And we can't ignore that. Almost 84 on Brent. So that's a big Q for us here in India. And it's a negative Q. To add to that, in terms of the earnings season, we've had absolutely no positive outlier, no sparkler of an earning all through this week so far. It's been either in line with a little bit of a sell-off because stocks have already run up, or, niggling worries and negative, for instance, Tech Mahindra. So as Prashant also mentioned now, just to recap, 100 points away from the 20 DMA on the Nifty, about 300, 350 points away from that level on the Bank Nifty. So we watch out for those zones carefully. Yesterday, we had a lot of selling in the cash market. FIIs have sold off stocks worth almost 4,000 crores. And the net inflow from domestic institutions was only 2,500 odd. So the net sell number, it turns up quite a big number because of the FII selling yesterday. And it's quite clear that while there's a lot of stock-specific action going on, the market is facing headwinds of leadership. There's a lack of leadership, really. If you just look at what's happened this week, you've got the FMCG index falling 2.5% because of all the earnings that we've got. The Bank Nifty is down about 1%. The IT index anyway was falling. It's never been much of a support in the recent past. So, those are the downers. Look at the sectors that have actually done well. Pharma, 4.5% up. Real estate has done well. And obviously metals, thanks to all the China talk. But these indices don't have much bearing for the index in terms of the weightage. So they don't really count. The bigger boys, your banks and IT, they have been underperformers. And that's been the problem for the market. Today, again, we're back to looking at results. I'll actually watch out for M&M Financial Services beyond just the numbers. Let's see if there's any interesting Q&A on this stake sale that they've done in RBL Bank. So that's an interesting one to watch out for. And the others as well, Bank of India, IOC, some of the others on your screen. But otherwise, index, not much so far this week, Nigel.
Well, that's right. So we got a troika of problems today. The yields are at 4%, the US bond yields. You have the Brent crude prices that are holding at around $83.5 per barrel. And the dollar index, for reasons that we just mentioned, are at around 101.7. So a troika of problems today. But the Nifty, it registered its fourth straight winning series. And now it's got its eyes on the fifth. Will that happen or not? Well, we'll have to see. And remember, this has not happened since mid of 2017. So it's been a while since we have had, 5 straight series. So history as well will be against actually the bulls. Now, those are the last few series been very, very good. 400 to around 800 points is what we have gained. But what does August hold in store? Well, we'll know in the coming month or so. Now, in terms of Nifty open interest at the start of the series, rolls have been higher. And that's why the Nifty open interest, it's relatively much higher in comparison to the average of the last 3 series. So it's more than 30% higher, the total open interest out there. The FIs, well, the long positioning has come down. They've added some shorts in the system as well. So we're starting the August series with the long positioning at close to around 59% odd. And the net long positions, that's the long minus the short, well, that's at around 33,000 contracts. The gross long positions are very high, but now there are some shorts in the system as well. Looking at the options data, you have the highest open interest at around the 19,800 put as well as call. But the PCR at this particular strike is at around half, 0.55. Because the number of calls that are written are far more than the number of puts written. And that should come up for you at around the 19,800 call. The total open interest is more than 1 crore shares. So that's telling you that the call writers, they have this confidence that at higher levels, we're not going to be going to those levels, maybe 19,900 or thereabouts. So which brings us to the levels. That becomes a resistance zone. Since the 19,800 call has a fair bit of open interest, 19,880, 19,900, that's a resistance zone. On the downside, the 20 DMA, which is 19,555, and yesterday's low, which is 19,604, that becomes a bit of a resistance zone. We're going to start off in the red and closer to around yesterday's low, We'll have to see whether or not we can hold that. The Nifty Bank as well. That did see a bit of a downtick yesterday. It's close to 300 points away from its 20 DMA, so I'll be watching that level as well. Implied start is in the red. Let's see how this goes from here. But we've, the bears will be feeling quite good going into today's session.
Oh, yeah, and we really have to watch for some of these levels that you also outlined. Because we're very precariously close to them. So let's see, today is going to be an interesting one. Let's start up with the equity call of the morning. Rupal Agarwal of Bernstein says that momentum has not been a successful strategy in India this year, and only parts of the trade have worked. She says stocks showing high earnings momentum have been rewarded, whereas chasing stocks with the highest price momentum has not worked. However, she adds chasing earnings momentum now looks vulnerable as it has reached a +1 standard deviation, that's 1 standard deviation level above to its 10-year average valuation and near peak earnings upgrade cycle. Some caution coming in there from Bernstein.
Well, let's get you some money market views as well. This is Lakshman V of Federal Bank, who says that the Fed and the ECB raised their policy rates to decadal highs, impacting the US dollar index as all the G7 countries were trading up against the dollar. He says the Indian rupee is caught in the midst of persistent dollar inflows and forex reserves related bids. He expects rupee to be in a range of between 81.638 to 82.28 for the next few trading sessions.
On bonds, Lakshman says that the FOMC was on expected lines with no clear indication of the Fed's next policy move. He says our domestic inflation reading could be higher on account of higher food inflation, and with no rate cuts in sight, our bond yields have been inching higher. He says coming sessions could see the 10-year benchmark bond yield trade in a range of 7.08 to 7.15%.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment, but let's run you through the list. BEL, ITC, Indus Towers, Sona, BLW, Macrotech developers, all the stocks are expected to open up in the green. Add to the list, Ajanta Pharma and Shyam Metallics. On the flip side, we have Supreme Petrochem as well as JK Lakshmi Cement that will open up in the red.
Okay, well, so that's basically what's coming through in terms of stocks, which we will discuss in a bit from now. Lawrence Belanco of CLSA is now joining us to run us through the technical picture, really. Lawrence, good morning. Great to have you with us here. Thank you very much for your time. Maybe a bit of a fundamental question to a technical fellow. So pardon me, but I don't know if you can tie it in with what you're seeing on price action as well, on charts as well. The Bank of Japan meeting and what it did to yields last night out there in the US and the nervous kind of reaction out there in stocks as well. How important is this one to watch, in your opinion?
Well, I think it's quite significant. I mean, if the yen is used as the carry trade for risk assets across the globe, if we do see an adjustment in that yield curve control, we could see the yen breaking below quite a key support level between 137 and 138. And as you saw, the reaction overnight, the yen strengthening did coincide with risk assets being sold off. So if we do get that adjustment and the yen breaks below the 137, 138, we could see a deeper correction across risk assets, including the Nifty, through the session this afternoon. So I think it is critical to watch that yen and the 137 to 138 area.
137 to 138 area. By the way, I mean, what's your house view? Lawrence, are we going to see something big? I mean, an exit out of its ultra loose monetary policy today, the start of it, or you think it's still unlikely, despite that newspaper report?
Yeah, I'm just watching the price action. So the evidence that I'm looking at on the charts is that speculators are still net short the yen at over 40% of total open interest. So if there is any adjustment, the risk of those short positions being squeezed out of the yen is significant. So I think it is a space that you need to watch carefully with that one-sided trade in place.
Okay. Lawrence, hi. Good morning. Just want to get your thoughts on the U.S. market setup right now, because we've had this consistent rally and a pretty strong one at that. Yesterday, we had a bit of a pause overnight. What's your read-through? How is the technical setup looking at when you're looking at any of the key indices out there?
Yeah, man, it's quite interesting. Since the end of June, we've really seen in the US, but across the region too, is rotation into laggards. So in the US, you've seen small cap start to outperform. The Dow Jones has got all the headlines recently, but it's been a rotation into parts of the market that have underperformed. So the Dow Jones had underperformed for the first 6 months of the year. It's made a good recovery through the month of July, but so is the small cap index. And that's given a chance to the AR theme, the tech stocks, to pause and consolidate that gains that we've had. And if you look at it across the region, we've seen quite similar. Hong Kong, China has been a big underperformer, and with some positive news headlines coming through, you've started to see a recovery there. So we're clearly seeing this rotation trade in the US, and that's filtering through to the region where lagging parts of the market are seeing some love and support coming through most recently.
Well, morning, Lawrence. Let's come back home then. What about the Nifty? We were breaking out. We were heading towards the 20,000 mark. To be fair, we almost got there. But what are the levels you're tracking on the Nifty, and where do we head from here?
Well, I mean, it's interesting. Mid-caps led the breakout in India. It was followed by the Nifty itself. And actually, last week, we saw India in dollar terms. So if you look at the MSCI India in dollar terms, we broke out last week from a 12-month consolidation pattern. So we've had breakouts across the board. We shouldn't be surprised to see some kind of pause and pullback. But like the S&P, the Nifty has seen its 20-day moving average as key support since April. So that, I think, is your very short-term indicator to look at. But the real breakout points and where the major support comes through is back at the 18,800 to 19,000 area. We don't think that will be broken, but that old ceiling should be an important floor to sustain the breakout. And just bear in mind the breakouts through that ceiling, which dates back to the 2021 high, still gives us two upside targets of 20,600 and 22,700. So those are still the longer-term upside that we have from the breakout that you saw in June.
Lawrence, some observers of price action have pointed out that once the market, right, any index for that matter, breaks out of a couple of years range, which it has held, or it takes out the previous high, I mean, it doesn't usually stop. It adds another 10-15% before it goes sideways or stalls, etc. Would you agree with that kind of assessment?
Yeah, it's quite common. I mean, basically these stocks or markets go into these trading ranges. There's catalysts that break out of those ranges. And you typically look at the breadth of those ranges to give you those kind of upside targets. So 10-20% moves from those trading ranges is quite common. And the longer a market's been in the range, the greater the re-rating potential from it. So yeah, from a chart side, that's how we would look at breakouts from these trading ranges. So as you say, the Nifty has been in a range since basically mid-2021. So we think this breakout is meaningful, and that's where these sort of targets of 22,000, 22,600 come up from those multi-month trading ranges.
Lawrence, any specific indices where you are very bullish on? I mean, sectors basically where one should look for opportunities. Or I mean, if you want to talk about stocks, that's great.
Yeah, I mean, one sector we keep on pushing to is banks, and that's one of the key drivers for the recent breakout in the Nifty. But another sector that we're starting to see breakouts from basing patterns, it doesn't have a long history, but if you look at a lot of the e-commerce stocks listed in India, but I'll take that more generally if I look at a lot of the China internet names, C Limited, for example, in Singapore, all these stocks having derated significantly through 2022 have spent the last 10 to 12 months basing out, and we're starting to see breakouts in that space. So, that's another sector now within India. After the derating from last year, you're starting to get meaningful breakouts. And I think on pauses and pullbacks within that space, I'd look at allocating new positions to that space and also keep a key overweight for the banks sector.
Okay, so banks and e-commerce, got that. Just to confirm the upside, breakout targets that you have, 22,200, and before that, I missed the level. Could you just repeat the level again, Lawrence?
Yes, sorry. So it's 20,600 is our short-term target, and then 22,600 is the target from the two-year trading range breakout.
Okay, got that. Lawrence, thank you very much for joining in. Good chatting with you. As always, you have a good day and a great weekend ahead as well. Well, that's a view from CLSA. On the technicals, they're retaining a bullish stance and expecting the breakout to continue above the 20,000 mark as well. We'll take a break on that note. Our list of top stocks to watch out for lined up just after the break. Welcome back. Well, our team is standing by to take you through the top stock list to watch out for this Friday morning. We're starting off on a bit of a cautious note overall on cues, but let's talk about individual stocks now. Hi, guys. Happy Friday to you. Vivek, I'm going to kick it off with you. BEL, how do the numbers look?
Well, good morning. Very strong set from Bharat Electronics. Historically, when you're comparing the Q1 results, margins are generally subdued, but this time around the company has managed to surprise even on the margins front. Now, talking about the results themselves, revenue largely in line with what analysts were anticipating. Margins beat both on the back of improved execution as well as low raw material expenses that actually aided the performance. New order wins that the company has declared has come in at a record high of 8,100 crore for Q1. Now, talking about the numbers themselves, revenues jumped higher by over 12.5%. EBITDA up almost 30%. We're talking about the core EBITDA, and margins improving by over 200 basis points. Profitability on the back of the improved execution jumped up almost 20%. Now, talking about the order backlog for the company at the end of Q1, 65,360 crore, which gives the company almost 3.7 times trailing 12 months order visibility, which is quite strong. Analysts do believe this is a significantly good set of numbers, and that's why we are going with a green on the stock.
Okay, thanks a lot for that, Vivek. Mangalam, tell us about ITC, the takeaways.
Well, the conference call was held yesterday post the announcement of the demerger intent, and the company didn't say anything that the street wasn't expecting them to say, because, as far as the questions on why they chose to own 40% of the hotel rather than a vertical split, they did say that it was for strategic reasons and to enjoy the synergies as well. The ROCE for the hotel business will, or rather the overall resultant business will increase by about 18 to 20 odd %, and the return on invested capital will increase in double digits as well. So that's a positive. At the same time, they answered the question, will other businesses be demerged? There is nothing on the table yet. ITC, the company, will charge a small royalty to the hotel business for usage of the brand ITC, and that will not be very significant. In fact, it will be in line with the industry standards, and the hotel business will have no debt on the books, and the growth strategy will continue to be asset right. All these things would make the ITC stock in the green today.
Okay. All right, got that. Mangalam, Indian hotels, just do tell us about those numbers as well.
Well, for Indian hotels, actually, the pace of growth is normalizing now, but it's not bad. 16% revenue growth is what the company has posted, but there has been a slight increase in their costs, as a result of which the margins have come in below what the street was anticipating. In fact, year on year, there's been a near 180 basis points reduction in EBITDA margin as well, but the net profit has been aided by lower finance costs as well as higher other income. Importantly, year on year, both occupancy and average room revenue have been increasing. Quarter on quarter, there has been a mild seasonal dip. I see some red on the stock largely because of higher other expenses, or rather higher operating expenses, and slight moderation in the hotel industry's earlier supernormal growth.
Okay, all right, got that. We'll watch out for this one too. Mangalam, thank you very much. In fact, we will be joined by Mr. Puneet Chhatwal, MD and CEO of Indian Hotels, at 10:15 today, so watch out for that conversation. Okay, on to Rima now. Rima, morning. You're watching out for a couple of stocks as well?
Yes, hi, good morning. So let me start with Indus Stars, where the key highlight is that the tower addition has been the strongest that we've seen since Indus and Infratel had merged. So this quarter, the tower additions are more than 5,400 towers on a quarter-on-quarter basis, which is significant when you compare it to FY23's tower additions of 7,500 thereabouts. So the tower addition is a key. Other than that, the numbers are pretty stable. There is a top-line growth of about 4.8% on a quarter-on-quarter basis. Margins have come down on a sequential basis, and that's because the allowance for doubtful receivables, doubtful provisions, as it's called, has gone up on a sequential basis. This is due to, receivables from Vodafone Idea. So that's gone up. But again, it's not an alarming number. The overall receivables from Vodafone Idea have remained stable, and this is something that the street likes. So I'm going to go with green for Indus Stars because, one, the tower addition is strong, and two, because the receivables from Vodafone Idea have been good. Sona BLW is another one that I'm looking at. Good numbers, 25% top line growth, strong margin expansion to more than 27%, driving a 48% jump in the company's profitability. The order book has expanded on a quarter-on-quarter basis. The only thing I'm going to be watching out for Sona BLW from here on is that the company has said the reduction of FAME 2 subsidies has resulted in lower production by electric two-wheeler industry. And that's the reason why their BEV, the battery electric vehicle segment revenue, has only gone up by 13% on a year-on-year basis, lower than the company average. So this is a trend that we will watch going ahead. Back to you.
All right, Rima, thanks a lot for that. Well, let's hop across to Sonal. She's here to tell us about Macrotech Developers and Supreme Petro. Morning, Sonal.
Good morning, Nigel. Macrotech Developers, well, we already had the operational update where the company saw a 30% growth in its pre-sales to come at 3,350 crore rupees, and they have targeted pre-sales of 14,500 crore rupees. Now in their numbers, they speak about FY26 targets as well, where they are looking at pre-sales of around 22,500 crore rupees in the MMR region, 4,000 crore rupees in Pune and 1,200 crore rupees in Bangalore itself. So it looks like they have tall targets going ahead as well. They also say new micro markets are scaling up, and 20 to 33% market share is what they have in the emerging micro markets, and that is one place they are focusing on as well. For Supreme Petrochem, it was a weak set, and the company saw a decline on a YY and on a quarter-on-quarter basis. Their margins almost halved on a quarter-on-quarter basis. The profits were down 57%, revenues also down 12%. Expect some red on that stock today.
Okay, well, thanks very much, Sonal, for that. The next one is Ajanta Pharma. I mean, you know, that's the one spot we will focus on a fair bit today. There was a big mover yesterday, but Ajanta Pharma for now. Ekta, good morning.
Thanks for that. Well, it is the margins which are back on track for Ajanta Pharma. So that's the key highlight, coming at 26.6% versus 23.3% year on year and versus estimates of 23%. Revenue growth of around 7% is largely in line with estimates. It is driven by India, which was up in double digits, up 14%. US did well. It was up 19%, so no problems coming in there. And the profitability has come in at around 208 crores, which is again better than expectations because of the better margins. They have also approved their first interim dividend ever because the company has turned 50 years old. It is a special dividend of around 25 rupees and a regular dividend of around 10 odd rupees. So overall, things looking good for Ajanta.
All right, Ekta, thanks a lot for that. Well, let's focus on JK Lakshmi Cement. Those numbers were disappointing. The volumes itself were a miss. We were working with a number of around 3 million tons. They came in at around 2.93 million tons. They were impacted by unseasonal rains as well as the cyclone that was there. It affected their sales in their key markets of Gujarat as well as Rajasthan. The revenues are in line. The problem was on the profitability, so clearly the lower cost haven't played out. Margins came in around 10.3%. We were working with a number of around 13%, and that's what led to the profit mix a miss as well. You had a couple of costs like transport and employee costs. Both of them were up by close to around 6%. And the company, well, they say that they're continuing with that vision of 30 million tons by 2030. So that one starts off in the red. The next one we're looking at is Shah Metallics. Well, we know most steel companies on a sequential basis, they've seen compression in terms of their margins. But look at the EBITDA per ton, it's down by only around 100 rupees. And that's where we're going with green, because they've made an effort to control cost despite prices being a little bit weakish. Remember, the promoter entity has 88% in the company. So now they've approved a fundraising plan of around 3,600 crores via equity instruments. So we'll keep an eye out on that. So maybe some mild green to kickstart trade.
Okay, so these are the other two we'll watch out for. Let's quickly recap the list then. Stocks that have positive news flow around them today are BEL, ITC, Indus Towers, Sona BLW, Macrotech Developers, Ajanta Pharma and Shah Metallics. The ones that have negative connotations around them are Indian Hotels, Supreme Petrochem and JK Lakshmi Cement. All right, that's on the equity side. Let's find out what's the latest in the world of commodities. We have Manisha Gupta joining in for just that. Manisha, good morning and happy Friday to you.
Thank you, Survi, for that. Well, when it comes to commodities, we have seen a bit of a weakness coming on Friday, but on a week-on-week basis, we still are trading on a firmer note. I'll start with the crude oil prices, where we have seen 4 weeks of gains. This is going to be a 5th straight week. And for this week, we are up nearly 5% for the crude oil prices. Well, the strength in U.S. GDP at 2.4% has been supportive. So has been the fact that you have seen a stronger demand continuing from China. The OPEC and allies output cuts for this month and the next and for the quarter might give tightness to the market, and that clearly has been supportive as well. What we have seen in sense of damages, though, has been the metals as a sector. So whether it's precious metals, gold, silver, or metals like, copper, coal, iron ore, zinc, all of these metals are headed for a weekly decline right now. The Chinese demand more or less has remained muted, and the metals are facing resistance as there is some bit of a mine wrap copper as well coming in. So some inventory increase for copper, aluminum also seems to be weighing on right now.
Okay, well, Manisha, thanks very much for that. Commodities and metals in focus. Well, we'll take a very quick commercial break here. We have the management of LG Balakrishnan to joining us on the other side on their first quarter numbers. Deepan Mehta will also be joining in Felix Equities to talk about specific stocks and results that have come out over the last 12 to 14 hours. Stay with us.
Welcome back. Hope you're having a good Friday morning. Well, as promised, let's get straight to our first management that we have on the show. We're joined by the management of LG Balakrishna. Remember, the company reported very muted growth on the top line itself. Well, to understand what's the way ahead, we are joined by Mr. Vijay Kumar, the chairman and managing director of the company. Hi, Mr. Vijay Kumar. Good morning. Thanks so much for joining in. Well, it's been a very muted start to the year, just mid-single digits growth. So my question to you is, for the year, what kind of a revenue growth are you looking at in totality? What kind of a margin outlook? And just break that revenue number up for us. How much do you expect to come in from exports and EV?
The export turnover will be about 12% of our turnover. We are looking at slightly muted growth. The expected growth from electric vehicles has not come through. In fact, there's hardly any growth in electric vehicles. And our regular growth rate, as I said in the last 3 quarters, we will continue to target 10%. Maybe we'll reach about 8 to 9%.
8 to 9% for this year.
Will continue at about 12%.
All right. 8 to 9% growth for this year. And you're saying EV sales still are very, very small. Could you tell us what about the margin outlook, Mr. Vijay Kumar? What are you looking at for this year?
The same as what I said last time.
17%?
17%.
Okay,
See,
all right.
Actuals may increase slightly more. Maybe it will be 18%, 1% this way, that way. But it will be in the region of 17%.
7%. All right. You know, the street seems to be pinning its hopes on the industrial chains unit. I think in Nagpur, you have a Nagpur plant out there. And that industrial chains unit, that's going to be commissioned. Could you tell us what kind of a contribution we can look at from this particular unit? When does it get commissioned? And how do you see the revenues ramp up in the coming years? That's FY24, FY25, 26.
That's a very good question. Unfortunately, I can't give you any good news on Nagpur because right now the building has been, we had to stop the building because of the floods. Oh. The whole area is full of water. So we'll be set back by about 5 to 6 months.
Oh, so when does it get commissioned then, this Nagpur unit?
It was supposed to be commissioned right now, but I think we will look at commissioning it in December.
Okay, so basically a 2 or 3 quarter delay. It was supposed to come on in the first quarter. So you're saying it'll happen in the third quarter now. Just to kind of press on that EV points, could you tell us what happened? Because I think you were targeting a higher content per vehicle there. I think you put out some numbers as well earlier. You're saying there's not very much traction. Why is that?
I think you all know about the FAME problems that all the manufacturers are having. The vehicles are just too expensive for the consumer.
No, you're saying that OEM sales, you're not getting very much by way of visibility from OEMs.
No, the OEM sales itself on electrics are down.
Right.
All right, Mr.
Vijay. Naturally, our turnover will go down also.
Got it.
All right, Mr. Vijay Kumar, we're a little short on time, but final question before we let you go. You know, the promoter stake had come down in the past, as you had told us. You know, I think your son was selling stake. I think now he's totally out. Do you have any plans of raising your stake from here on from these levels? Point number one. And point number two, I was looking through your annual report, and the company has a stake in LG Equipment. That could be close to around 135 crores at current market price. Any plans to sell that, or do you all want to hold it?
At the moment, I think we'll hold it. I can't talk about LG Equipments because of unpublished information. So we will continue to hold LG Equipments.
Okay.
And what about your own stake, the promoter stake in the company LG Balakrishna, sir, which has come down now to just a level of about 33%. So what's the plan within the promoter family?
We will have to look at how to increase our stake. We will probably go through the market and we'll have to see what all methods are there to increase our stake.
But to what level, sir? But to what level would you want to have the promoter shareholding? You're at 33%.
I would like to reach 42%.
Got it.
Right now, I'm at 36, 37%.
Okay. Mr. Vijaykumar, just one more, just last question. With regards to that EV, I mean, it was seen as a big opportunity. Could it be a risk, as you're saying, there is no real pickup? I mean, it will happen over a period of time, but there is a risk of obsolescence with the traditional products set as EVs take over. I mean, that was how would you kind of characterize the opportunity as a risk? Or you think one will have to look outwards? Exports, as you said, perhaps, which is about 12% of revenues, will have to grow much faster.
In terms of growth, yes, our RSIL plant also, we are awaiting the judgment. So there are ways of increasing our top line, but where the historic products are concerned, it will continue for another 10 years, I'm sure.
Got it.
It's only the opportunity of EV has fizzled out a little bit.
Okay, for now, hopefully, and things will pick up. Thank you very much. Appreciate you joining in, and great speaking with you, sir, on that. Thank you. That's LG Balakrishnan with some numbers and outlook. 11:20 on the stock. Well, Deepan Mehta is with us now to take some questions. Deepan, good morning. Good to have you here. Thanks very much. The market's looking a little tricky now, isn't it? Especially with what happened last night in the US. I don't know if you saw, off 52-week highs, the market suddenly reversed. Sharp reversal, 2.5% kinds. Yields have jumped. There is this Bank of Japan meeting this morning. Your thoughts, near term?
Yeah, good afternoon, Prashant. Thank you for having me on your show. So I think it's a great time. The bull market is taking a pause over here, and you have a chance to rebalance your portfolio. If you have excess cash, then that also can be deployed. I think these sort of corrections are healthy. They remove some of the froth from the market and provide an opportunity to buy stocks at your prices rather than chase them. So far, I'm very pleased with the earnings season. And on the whole, I think the economy is quite buoyant. The bank profits are reflecting the underlying strength in the fundamentals of various sectors. And I'm pretty comfortable with this correction, looking at increasing exposure as and when opportunities arise.
Okay, Deepan, hi, good morning. So I just want to get your thought on yesterday's big newsmaker. That was Mahindra & Mahindra. The market kind of gave its verdict in terms of the confusion, the lack of clarity on why. The big question is really why. But till we get that answer, what is your advice on the stock?
Good morning, Surbhi. I think that there is some explanation, some logic as to why they are buying the stake. And even if they are buying it as a portfolio investment, I think it should do very well. We have seen RBL Bank's numbers for the past 2 quarters, and they've been quite impressive. They're not growing at much higher than the industry growth rates, but at least they are doing responsible lending, and the bank NPAs have been completely cleaned up. All the top management issues have been resolved. So even if M&M, which has got significant surplus liquidity, just looks at it as a pure treasury stock, even that is perfectly fine. But I thought the correction in M&M stock price was a bit overdone, and maybe it's a good opportunity and M&M, by the way, has been performing really well. It's a good opportunity this correction is a good opportunity to get into M&M stock. We are very positive on autos, and M&M is one of our top picks over there. Having said that, it's a company in which we and our clients are invested. So I'm not too perturbed about this decision. I think it's an opportunity for entry into M&M stock.
All right. Deepan, good morning. Deepan, you've not been a fan of cement, but yesterday ACC came out with a set of numbers, and I'll tell you what, those numbers were stellar. We're not talking about a 10, 15, 20% beat. It was close to a 30% beat in comparison to our estimate as well as consensus estimates. What's your view on the stock from here on?
Yeah, Nigel, I have to admit the numbers were exceptionally good. Even Shree Cement came with very good set of numbers. Apart from that, broadly, I think cement has disappointed. In ACC, I think it is this entire one-time structural cost, changes which are taking place for the better. And if you look at the numbers, the actual raw material cost to sales have gone up, but all other costs, transportation, other expenses, employee costs, they all have declined significantly. And the jump in operating profit margin clearly is the magic which is there in ACC. I expect Ambuja also, could report similar set of numbers. And that was the thing about ACC and Ambuja, that, their cost structures and their margin structures were higher than the industry. There were more efficient players like Shree, Ultratech, and JK. And now I think ACC and Ambuja are playing catch up under new management. So this could be a kind of a one-time adjustment taking place in the operating profit margins. But from there on, I think industry trends will prevail. And we are very clear about the industry trends not being that favorable despite 20% type of volume growth. The margins and the actual operating profits are flat. So that shows increased intensity of competition, and every company is going in for massive expansion. So this situation is not going to change. So you may have a trading rally in ACC and maybe even Ambuja as well, but I'm not getting attracted to those stocks at this point of time, and we maintain our underweight view on cement.
Got it. We had to discuss pharma, Deepan, so we'll let you think about that. Just coming to you, back to you on that. But Anuj is here to take us through how he's seeing things. Anuj, good morning. By the way, a good call on pharma yesterday.
Good morning, Prashant. Thanks a lot. Just one of those lucky days. The market is trying to find new pockets of leadership, and in that, of course, pharma stood out. But overall, the price action was quite disappointing yesterday. Though you may want to give some benefit of doubt because of expiry, and it was the monthly expiry. But the price action was disappointing. Make no mistake about that. The market had after a long time made a higher low and a higher close. But yesterday, not only did we evaporate previous day's gains, but we actually made a fresh low for this swing. That was very disappointing. 19,603. The previous low was 19,610. What this correction and consolidation has done, though, is it's allowed the moving averages to catch up. The market had been running up in a parabolic fashion, and in that sense, perhaps now there's some sanity in the market. Just to give you an example, the current 20-day simple moving average is placed at 19,555, and the 20-day exponential moving average is placed at 19,513. Normally, the first test of the 20-day moving average in an uptrend is defended. So let's hope, it's a leap of faith sort of hope that perhaps this will work, the 20-day moving average. What the market is lacking, though, is leadership at index level. The mid-cap index yesterday also hit a fresh high, and advanced decline was quite strong. HDFC Bank, Reliance, Infosys and ICICI Bank, the top 4 stocks by weight, all of them are looking tired. One of them or two of them ideally need to fire up and take Nifty back towards that higher levels. If you ask me personally, HDFC Bank looks like the most sort of likely contender to take that leadership, but don't want to preempt that. Let's see if the market sees support at that 20-day moving average.
Okay, all right, Anuj, thanks a lot for that. Well, time to slip into a short break. On the other side, we'll be joined by Mitesh Thakkar and Shrikant Chavan, who will be joining us to give us the technical trades.
Okay, welcome back. Let's just have the GIFT Nifty up on our screens. It's indicating a 60-odd point lower start. You know, I was just noticing the Bank of Japan decision, by the way, which we were talking about earlier on as well, was supposed to come out our time at 7:30 this morning. It's an hour and a half late. Traditionally and historically, whenever the decision has been so much later, there perhaps has been you'll have to go because the last big policy change happened, I think, 10 years ago. But before that, a big delay used to usually mean a significant change in policy. I mean, interest rates, etc. Of course, for the last 10 years, we've seen very ultra-loose monetary policy. So maybe something big, or for some other reason, the meeting decision has been delayed. But we should have that shortly. All right, let's get our technicians in to tell us what they're making of the screen. Mitesh Thakkar is with us. Shrikant Chauhan is with us as well. Gentlemen, good morning. Good to have both of you here. Thank you very much. Mitesh, let me come across to you. Will we test the 20-day? Does it look likely? It's not very far now. And what from there, in your assessment?
Morning, Prashant. I think there's a good chance of that happening. See, yesterday, while we did decline below that pivot of 19,650, we didn't get an hourly close below that, as there was some recovery towards the last 30 minutes of the session, maybe expiry related, difficult to say. But overall, I think this does not look like a market which will make new highs immediately, which means that there's a good chance that 19,850, 900 on the upside and 19,650 on the downside are the ranges. But in case we break below 19,650 on an hourly close, I'm looking at a test of 19,500, 450 zones, which is towards the 20-day average area. So I think there's a strong chance of that happening. I won't be in a hurry to buy, but on stock-specific basis, yes, we have some long positions. But broadly on the index, let's see, around 19,500, 450, we will see some reversal signals and then look to buy into the markets.
Okay, all right. So being more stock-specific for now, Mitesh, thanks for that. Shrikant, good morning. How are you approaching the indices?
Yeah, good morning, Survi. Good morning. I think, the markets are very clearly finding resistance close to 19,800, 19,850. And yesterday, it closed below the mark of 19,700 comfortably. So based on the overall technical formation, I think we are very clearly heading towards the levels of 19,500, 450. And in case if there is any rebound or because of any reason, if we see any rally in the market, then close to 19,800, we need to be very, very careful. So we should look for reducing some positions. I think it is going to spend some time. It is going to consolidate within the broader range of 19,400 and 19,800 for the next couple of days or maybe few days. For the Bank Nifty, there also it closed below the mark of 45,700 and it has validated the double top formation. So from here, the Bank Nifty can also fall to the levels of 45,000.
Okay, all right. Hi, morning, Shrikant. What about individual stocks?
Yeah, good morning, Nigel. I think, yesterday we saw a good amount of buying activity in real estate and pharma companies, especially Cipla, where we saw a huge amount of volumes and volume and price breakout. So after a very long time, we are seeing such type of activity in pharma companies. Almost all the stocks were on the higher side. Based on the overall formation of the pharma index and Cipla, we are of the view that we should be buyer in Cipla close to current levels with a stop loss at 1130. We are expecting stock to move towards 1230, 1250 in the near term. And on the basis of a rally in the crude prices, I think we should look for reducing or taking some short bets on tire companies. Apollo Tyres, which is currently around 420, 422, there we should look for creating some short positions. I think Apollo Tyres can fall to the levels of 400, and here we have to keep stop loss at 428.
All right, Mitesh, what about you?
I have a mix of buy and sell calls. A buy on Granules with a stop at 314 for targets of 336. And a buy on Marico with a stop at 543 for targets of 580. And on the sell side is M&M. Disclaimer, we have some put option positions, but on a mild bounce back, say around 1455.60. You go short with a stop at 1486 for a target of 1400. And Intellect Design and Software is a sell. Keep a stop at 591, look for targets of 550.
Okay. Marico reports today, but thanks very much, both of you, Mitesh and Shrikant, for those calls. We'll take a quick commercial break here. There's 4 minutes to go for the pre-open session. A lot more to discuss. Pharma, of course, still something we're going to talk about. We're back in just a bit. We'll also have the management of Birlasoft joining us on the back of the first quarter numbers they reported. Stay with us.
Welcome back. Well, let's get in some derivative strategies. So we have Sneha Seth of Angel One who joins us this morning. Hi, Sneha. Good morning. Fill us in with your strategies.
Very good morning, Nigel. If you see, market has been trading in a range. So the broader range would be 19,500, 550 on the lower side, and on the higher side, 19,800, 850 should be acting as a resistance. So this is the range. In case of banking index as well, we see a support around 44, 400, 500 odd zone, and on the higher side, 46, 300 should be acting as a resistance. So this is the range for the index. At present, we would say that until we are trading in a range, we should avoid trading in the index and prefer stock-specific approach. In individual counters, I'm liking GAIL, wherein we have seen a breakout beyond 116, 115 zone. So there was a resistance around 114, 115, and we have seen a breakout with the volumes as well. So I would recommend buying GAIL at current levels, or we can say that we can buy in the range of 116, 117 or so, and the stop loss will be around 114. The target will be around 121. Apart from this, we are liking Marico. If we see, we have seen a strong run from 460 odd levels, and recently it has been consolidating. But yesterday we saw a sharp move of nearly 4% with the volumes. So I would recommend buying this counter as well with a strict stop loss of 541, and the target will be around 582.
All right, Sneha, got that. Thank you very much for joining in with your trading calls. Pre-open rates have started coming in, and the Nifty starting about 20 to 25 points lower. And tech seems to be on the downside, at least early trends that we are getting. TCS, Infosys, these are some of the names on the red side. Deepan, yesterday's big mover, of course, was pharma. What did you make of this huge rally? I mean, Cipla, for instance, your thoughts on this one or any other pharma stock that you like?
So I think by and large, pharma companies are reporting decent numbers, and the cyclicality which is there in the generics business is showing an upswing because of certain changes which have taken place. I hear that there are some bankruptcies in the US generics market because of which the competitive intensity has reduced. And I think this is typical of any cyclical businesses. You have the ups and downs, and right now I think they are seeing a cyclical upswing. But even that notwithstanding, I think Indian domestic market also has supported a lot of pharma companies. And specifically with Dr. Reddy's and Cipla, they have this para-6 exclusivity in one particular drug, which has resulted in super numbers for those two companies. I think that this is the beginning of a mild upswing in pharma stocks. And from a neutral to underweight position, I think investors should get into overweight position in pharma next 2-3 quarters. Look very interesting. And I think what goes most in favor of pharma stocks is that it's a largely under-owned sector, considering that the past several quarters have been disappointing for many companies over there.
Okay, got that. Deepan, thank you very much for joining us this morning. Always good getting some perspective from you. By the way, that is the first of the BOJ announcements, and that's on the expected line. They were, anyway, expected to maintain their current rate stance. The question is their yield control policy. Are they going to tweak that policy or not? I think we have to just wait by. That's the first flash that's come in. And I think gradually we'll get some more details in as well. Nothing more about the yield control curve, yield curve control, at least as of now. So in the meantime, as we wait for that, let's move to our next management conversation. Birlasoft came up with a good revenue number for the first quarter. Margins also expanded to above 15%. Profits saw good growth as well. Let's straight away take the conversation to Angan Guha, Managing Director and CEO of the company. Mr. Guha, thank you for joining in. So I think the street is looking at your top line growth X of this $2 million termination fee that you had. That's a one-time gain that you had in Q1. X of that, I think the top line growth is 1.7%, which isn't bad in the current environment where we see a lot of IT companies really struggling. A lot of your individual verticals like BFSI manufacturing, they've also grown. The question is what next as you sort of look forward in the future? What are clients telling you? Because the deal win number, at least, that's not been very, very great. So tell us what's the lay of the land as you see it.
Yeah, thank you, Survi, and thank you for having me on the show. So look, we had a good quarter. I mean, good quarter on both aspects, right? Like you said, the revenue 1.7% outside of the 2 million, but including the 2 million, about 3.1% growth. And for the first time, we've crossed the 150 million mark. Similarly, on the margins, I mean, I think that's a even greater story because we've been able to expand margins by 168 basis points. So look, we will continue our focus on execution. I know the deal inflow was a little soft, but that is only because some of the decisions got pushed out to the future quarters. We didn't lose any deals, right? Our pipeline continues to be very strong. And if you really think about it, Surbhi, if you look at the last 3 quarters and look at signings from a 3-quarter perspective, you'll realize that we have had significantly strong quarters in 4Q of last year and 3Q of last year. So in a combination of 3 quarters, I think we are feeling a little bit more comfortable and confident of continuing the growth momentum. Now, how much growth is hard to predict because the uncertainty still continues.
Mr. Goa, but sorry, so you're just saying because deal signings, that's what markets are worried about, right? Could you give us some idea? I mean, I know it's hard, as you said, the environment perhaps is a little uncertain, but just some idea about what where that number would track, in your opinion, through the rest of the year?
So, Prashant, I feel, our deal signings will only improve from here, right? The first quarter is a little soft. It traditionally is a little soft. But based on the pipeline that we have and what we know today, based on the client conversations, I'm getting a good feeling that our 2Q numbers, even on deal signings, will be better than 1Q.
Okay, all right. Hi, Mr. Goa. Good morning. I think you had a target earlier that by the end of this year, you want to take margins towards that 16% odd mark. So is that still on? Can you do it a little earlier? Point number 1. Point number 2, attrition, well, it's come down a little bit, but it's still relatively higher. Where do you see that number plateauing out?
So, Nigel, first of all, on the margin front, again, like I said, we delivered outstanding margins this quarter, and we will continue to focus on execution. The rigor on execution is now becoming table stakes as far as Birlasoft is concerned. We are still committed to exit 4Q with a 16% margin. And mind you, we will do a salary revision starting the 1st of September. So considering all of that and the fact that 3Q will have a little bit of furloughs, we still are very confident that we will exit 4Q with 16% plus EBITDA. Now, I can't give an exact number, I'm sure it's a little hard to predict an exact number, but 16+% of EBITDA is what we are comfortable with. As far as attrition is concerned, it's come down. We will continue to focus on employee policies. Like I said, we are, doing salary hikes. We are giving promotions to our people, and I see that number trending down.
Okay, all right. So you are confident of exiting the year at 16%. Your shareholders will really like the sound of that. Just to go back to deal wins and the pipeline in the future, can you give us some more color? I don't know if it's possible if you can even project what could be a sustainable revenue run rate. But if you can't give us a number, then at least some more guidance, because both banking and manufacturing, both these verticals did well for you. So you mentioned there are some delays. Where might the clients start actually signing the deals a little quicker in terms of which sectors? What exactly are they saying?
Yeah, so BFSI will continue to grow, so will manufacturing. And what is heartening for us is even the life sciences business will bounce back. Now, whether it bounces back in Q2 or Q3, I'm not too sure. But based on the pipeline, it suggests that it will bounce back sooner rather than later. Look, we've got a good pipeline in all our sectors, right? Whether it is financial services, whether it's ENU, whether it is life sciences or manufacturing. Now, the trick would be to convert the pipeline, but the pipeline is growing.
I'm sorry, we're all pressing on that same point, but new deal wins last quarter were $114 million. It's come in at 80. Renewals were 172. That's come in at 66. So these are sharp quarter-on-quarter. There's a sharp deceleration, and hence the reason. But you're saying that Q2 onwards it will pick up. I mean, this is perhaps the bottom.
Yeah, Q2 onwards it will definitely pick up, Prashant. But again, when you're quoting the numbers for the quarter, and I appreciate what you're saying, and that's the right way to project it. But you must always look at signings over a period of time, because customer decisions are not in our hands. We can only look at increasing our pipeline and working with clients to get the orders signed quicker. And that is what we'll be focused on. But you're right. Our Q2 will start looking much better, even from a signings perspective.
Okay, all right. Thanks very much, sir, for joining us, and we wish you all the best of luck. Speak with you soon again. Thank you very much. That's Birlasoft there. 405 numbers are good. Maybe deal pipeline perhaps coming in. Not deal pipeline, deal signings a little bit of a disappointment. Time to get our 9-10 calls. Mitesh is with us. Mitesh, what do you have?
I'll go with the buy on Granules for targets of 336.
Granules with a buy at 230, with a target of 236. Sorry.
336.
336. All right, 323 on the price right now. Mitesh, we didn't. Did you have a pharma name apart from Granules earlier on in your list of picks?
Not recently, but earlier we had calls on Glenmark, Aurobindo, etc.
Okay, Cipla, any thoughts after the large move yesterday?
Yeah, I think, see, the gap was very big. Typically, these kind of gaps do produce follow-through movements. But yesterday, we also saw the stock price come up from the day's high. I think this remains a buy on mild declines. Let's say around 1140, 1130 is my range to enter over here. And I think it will top the highs of 1220, which it made yesterday.
Okay, all right, Mitesh, thanks a lot for that. Well, let's focus on ACC. The numbers came yesterday and they were really, really strong. So let's run you through a couple of brokerages that are bullish and a couple of them that are bearish. UBS, they have a bullish, they have a buy rating out there. Target price have increased to 2,400 rupees per share. They remain, it's the only buy, from the cement pack that they have from large cap cement companies. So they like it. Strong volume growth as well as margin improvement. That's what will give confidence to the market is what they believe. And that discount that it trades at in comparison to its larger peers, it could narrow. Citi as well, they've gone ahead and increased their target price by around 200 rupees to 2,350 odd. They're saying efficiency as well as business initiatives. They are playing out finely, so they like it. While CLSA as well as Morgan Stanley, well, they are not too perturbed out there. CLSA has an underperform rating. Morgan Stanley has an underweight rating.
Okay, that is ACC. By the way, just got the details out on BOJ, Prashant, so there's no change in the yield curve control policy. It stands at status quo. So this whole speculation in the forex markets and the bond markets all been put to rest. The BOJ has done nothing to change its yield curve control policy. Let's quickly move on. We have Ekta joining in on Laurus. What's the takeaway, Ekta, after the numbers?
Well, definitely caution which is coming in from the analyst community with regards to Laurus Labs, because they did hold their conference call after what was a very disappointing set of numbers post-markets. A couple of key takeaways: lower demand and pricing in the ARV, which is antiretroviral segment, impacted sales. ARV demand, however, according to them, has been firming up. They expect better revenue in the future. The non-ARV business is expected to contribute FY25 onwards, and they expect EBITDA margins to improve Q2 onwards as well. There are no plans of a buyback in the near term. Net debt is expected to increase by FY24 and decline from those levels in FY25. Jefferies underperformed, target price 350, no big CDMO product to fill the void left by the high margin Paxlovid drug. Motilal has a buy, target price of 410. They remain positive on factors such as limited scope of price pressure in the ARV segment.
All right, thanks very much for that. BEL, let's put the spotlight back on it once again. Vivek?
Well, that's right. Given the fact that Q1 is actually a seasonally weak quarter and contributes just around 15% of the total annual sales, this time around, Bharat Electronics managed to deliver a handsome beat across all of the parameters, and this has actually made UBS go ahead and raise the target price on the stock. They already had a buy rating. They've raised the target price to 162 from 140 earlier. What they're saying is that the strong top-line visibility, given the very handsome order book that the company currently has, should go ahead and drive a re-rating as far as the valuation multiples are concerned. They believe that the operating margin mix was led by a richer mix as well as richer operating leverage that the company enjoys, and they believe going forward the export order mix too will improve, thereby driving further order inflow activity from the export markets.
Okay, all right, got that. Thanks very much for the details there, Vivek. By the way, I just want to point out, in the pre-open, Ajanta Pharma is surging 10%. These are number reactions. The Intellect Design Arena, the other one. These could be the stocks to watch in terms of the result reactions coming through, because they're very, very strong in pre-open. A couple of these stocks. So the rupee is opened sharply lower, 82.27 compared to 81.83. That's a very large move on the currency coming through. Just wanted to point that out. But we're at market open now. And we are off actually on the green side of the screen. That's about a 30-point jump on the Nifty that we are getting straight away. Mid-cap index also has opened on the positive side. Let's look at the movers on the upside then. M&M is trying to bounce back from yesterday's slam dunk, 1% higher there. Infosys, ITC, Wipro, even LTI Mindtree, these are some of the names on the upside. Okay, now we are on the red side of the screen. Dr. Reddy's, by the way, still continuing that move from yesterday, up about 0.7%. Market is now slipping, so let's look at the losers. HDFC Bank is the big one that's dragging things this morning. TCS is the other. L&T is the other major giant, which is on the downside. Apart from these key big boy blue chips, you have BPCL and ONGC, both those stocks starting lower. Sun Pharma is cooling off a little bit. I just want to check what Cipla is doing after yesterday's mammoth move. Cipla is absolutely flat, not too much. So it's a very cautious start, very range-bound right now, but the color has very quickly changed to negative. 19,635. Remember, yesterday's low was 19,603, so that's the first level that we will keep in mind. But it is some of the banks and some of the IT names that are key drags. HCL Tech is also on the lower side, Kotak Mahindra Bank on the lower side. These are the key culprit areas. But Nigel, I think more headlines coming through beyond the index as well.
Well, that's right. Intellect Design Arena, that stock is up close to 6.5%. So that's off in style today. BEL, Vivek told us his numbers are quite good, so that stock is up close to 2.5%. India Bulls Housing Finance, after a while, we're seeing quite large volumes on that one. On the flip side, you have RailTel that's under some pressure. That's down close to around 5% as we speak. RVNL as well, government offloading some stake out there, so that as well is a little bit lower. But clearly the stock, I think, of the first few minutes has to be Intellect Design. That one's flying away as we speak. I think JK Cement as well, JK Lakshmi Cement, beg your pardon. That one, in fact, started off on the back foot. It was down close to around 4% in pre-open. It's down close to around 3.5%, so a bit of disappointment coming in there. And ACC, well, the stock is up close to around 0.5%, building onto yesterday's gains. As we said, those numbers were very, very strong. It has valuation comfort as well. Explains why that stock has moved to the high point of the day.
I just want to pull up Ajanta Pharma as well. So if there are two major result reactions on the upside, they have to be Intellect Design and Ajanta Pharma. Ajanta did a revenue growth of 7%, big margin expansion, and not just that, they are saying they'll grow 24% this year. That's the revenue guidance that they're giving out, and the market's really lapping it up. So these are some of the names on the upside in terms of the result movers. Yeah, otherwise, Delta Corp is the only other one. Otherwise, it's a little quiet, Prashant, in the overall market.
It is quiet. So just about a 20-odd point cut on the Nifty is what we have. Just a few more names, apart from Intellect and Ajanta. Motilal Oswal Financial Services, I mean, that stock is up 6%. It's coming up with large volumes. I'm not sure this is a results reaction or something, but okay, it is a results reaction. It's a 6% move, 866 on Motilal. Vesuvius, we pointed out yesterday, it was up 20% on the back of earnings. It's up another 6% this morning. So 3,400, decent volumes for this point in the day. I think we pointed out Delta Corp, 2.5% on that one. MGL is up 2.5%, but it's never one gas company alone, so keep an eye out on the others as well. We've got what else? NCC, which is coming up with a 2% odd pop. Thangamile continues to run, the jeweler, the Tamil Nadu-based jeweler. That's up another 3%. I think some 15% or maybe more since the results have come through, more since earnings just a few days ago. So Torrent Pharma is another one, which is up about 1.5% as well. RVNL is down. I think we highlighted that. RailTel is down 3.5%. So this entire PSU pack, which has done very well, is all down with government OFS and RVNL. Maybe people are anticipating the government to do something similar in other very good performing stocks as well. HPCL is starting a little lower. Motherson is down 2.25%. That's at about 98. Another one. And Lal Path Labs is starting down 4.5%. You'll hear from the management in about 15 minutes or so as we sort of begin this trading session. So that's basically the up and down of it. 30 points lower, 19,625 is where we are at. Manishi Ray Chaudhary is Asian equity strategist at BNP Paribas. Manishi, good to have you with us here. Thank you very much for your time. I mean, you look at broadly Asian markets. I don't know if you were waiting for that Bank of Japan decision today, but well, seems like it's nothing. The decision was delayed. Maybe they were having a few more chai, samosas and chai or whatever, but it's the last big central bank, and that's why I guess there was a fair bit of anticipation after that Nikkei report that maybe they will make a tweak, but nothing. So in that sense, that one large risk out of the way, what's your view, markets from here?
So, if you look at the Asian or emerging markets, as a whole, they have begun to revive in the second half, and that's something we also anticipated. In fact, in our second half outlook, we actually wrote that. We said that we're turning more positive on Asian equities in the second half of 2023 for 2 or 3 simple reasons. First, the monetary policy trajectory of the global central banks is much more visible now than it was about 6 months ago. I mean, one doesn't know whether the Fed would hike once more in September. But whatever that outcome may be, it's now clear that we're at the fag end of that rate hike cycle. Second, Asian currencies are actually stabilizing. They had depreciated all throughout 22 and possibly the first half of 23, particularly the first quarter. But now it's clear that they're likely to stabilize more. We also have a situation where the Asian central banks may actually be in a position to cut rates, from early 2024. Finally, we're also seeing more earnings estimate upgrades across Asia than we were seeing about 6 to 8 months ago. So some of the large sectors in Asia, like Korean tech, like Indian industrials, they have joined in, which wasn't the case earlier. I mean, when I look at closer home in India, it was only financials all throughout the second half of 2022 and early 23. But there are now more sectors, even in India and in the rest of Asia, which have joined in that club of earnings estimate upgrades. So these are clearly positive signs. And while we may still continue to have some degree of sideways movement in the Asian markets on account of the still prevailing recessionary concerns in the developed markets, broadly, the situation clearly looks better than it did about 6 months ago.
Okay, good to have that view, Manishi. Good to have a positive sort of statement this Friday morning. By the way, the market is selling off. I just want to point that out. We went very close to yesterday's low. Exactly took support there at 19,602 thereabouts. You can see the Nifty is pretty much, kind of slid down to the lows of the session. Need to watch out for the banks. It's once again the banks that are leading the decline. Look at the bank Nifty now. It's down over 0.5%. And Manishi, that was my next question to you. Completely take your point that banks led the India rally last year. They are the darling sector for a lot of foreign investors. But what's happening now? I mean, we've got our share of foreign money right from April onwards. But the banking index, large banks, they've pretty much been sitting out or, they've been at the periphery of whatever move we've had so far in India. So what do you think is going on here? There's nothing wrong with earnings, at least as of now. Most large cap names have reported pretty healthy numbers.
Absolutely. I think it's it's that classic case of very large investments having gone in over the past 6 to 9 months. And therefore, investors taking a breather on a particular sector. There's nothing fundamentally wrong, as you pointed out. One thing we must take cognizance of, which is that going forward, the kind of NIM expansions that we had seen for the banks, that's unlikely to happen. In fact, you might even see for some select banks some NIM contraction, interest margin contraction. So I think some investors are also taking cognizance of that. But if I look at the longer term, over the next 2-year, 3-year, 5-year cycle, then the private sector banks in India are in a very sweet spot. We have credit growth about 16 to 17%. The private sector banking universe is constantly gaining market share. Their asset quality is very decent. And on top of that, we have a situation where the corporate universe in India is highly underleveraged. If you look at the top 500 companies, their debt to equity ratio is hardly about 45% or so, and that's a decadal low. So obviously, the companies, when they get into the next capex cycle, they have room to leverage upwards. So I think, this short-term underperformance of the banking sector is nothing to worry about.
Okay, so positive on Asian emerging markets, including India, for the second half, and no cause to worry about the banks. Got that. A lot of earnings today, so we'll have to keep it a little short this time around. Thank you very much for joining in, Manishi, and we look forward to a longer conversation next time. You have a good one. Well, with that, let's actually quickly get back to more numbers and earnings. Our next corporate conversation is lined up. Dr. Lal PathLabs reported a good set of numbers for the first quarter. Margins came in better than estimates. The non-COVID-19 business has actually moved very, very smartly. Bharat Uppalipan, CEO at Dr. Lal PathLabs, is with us now. Bharat, thank you so much for taking this call. So I think the market's, taken heart from the fact that now, ex of COVID as well, the business is really growing. And it's a double-digit growth that we're talking about in the revenue. Can you give us a sense of what's happening with realizations? Is most of this growth volume-led, or is it also value-led?
Good morning, and it is good to be on your channel again. And if you look at our top-line numbers, we grew at 7.6% total revenue, and we also grew the non-COVID revenue by 9.7%. Now, when you break this growth in whatever form you want, underlying point is that we have had a good realization improvement led by SwasthFit, which continues to grow well. Our specialty portfolio continues to do really well. Our non-COVID, excluding RT-PCR volumes, has grown by 2.5%. Now, this has been a bit below what we would normally like to have. But as the year progresses, we are looking for a smart recovery in these numbers on the volume growth as well. So yes, lastly, it was led by realization with multiple factors rolled into it. But as we look forward to the second half of the year, we should see the volume growth also come back in some form and shape.
Okay, so just a point on realization, since the bulk of this growth is due to realizations, can you give us some more color on that? What is the price elasticity that you're seeing in the market? Do you think further price hikes are even possible? And has competitive intensity now completely petered off?
Yeah, so we had taken some price adjustments on the high-end portfolio of our business, which was more manual, more technical oriented, given the large rising input costs on those counts. And we are happy to kind of confirm that the pricing adjustments we took has really settled in well. There has not been a significant kind of what I would call channel pushback, etc. It has really rolled in smoothly well. So that has contributed to what I would call a bit of margin improvement and a bit of top line as well. But the more heartening thing around the whole realization improvement is on the SwasthFit mix, which is a bundle test portfolio, now going at 112 crores for the quarter. So if you extrapolate a number, we are looking at a 500 crore kind of run rate for this product line, which we built from scratch. The second is that there has also been a positive impact because of the high-end test portfolio, which sells at a higher realization per patient compared to the routine test portfolio. Third thing which worked in our favor for this quarter is that Delhi NCR, which was kind of a low growth market, showed a step up in the growth profile, given that it benefited from an advertising campaign we launched this quarter to take the discussion away from price. From a competitive intensity point of view, yes, if you look at from a past perspective, the money being spent by all players have come down, but the intensity vis-a-vis pre-COVID continues to be high. So that is what we are currently working through the whole scenario. Coming to further price increases,
Yeah, sorry, go on. Go on.
On price increases, our view is that we must take price increases only when necessitated by cost input increases and not to kind of drive revenue growth up. So our efforts are going to be centered around getting the volume growth up back to what we would like for it to be.
Okay, no, got that. No, fair enough. That's a fair bit on realizations, but the no growth in patient volume, I think that is the big concern here. You're saying you will see improvement.
So let me demystify the patient numbers. Last year, Q1 had a very high base versus the historical past. Close to 25% of the patient revenues was in quarter one last year. Now, there could be multiple reasons for it. One is the Omicron wave and the following H3N2 wave kind of coming into the picture, etc. So net of COVID revenues, I think our patient volumes grew at 2.5%. Also, sequentially, we grew volume at about close to 8%, and that is very heartening because if you look at a sequential trend, that is what will really drive this business forward. So that is the reason why we say that, over the coming second half, we will start to see a better number on volume. Currently, the volume number is not flat. I mean, it's flat on an overall basis, but if you kind of peel the onion, then it is a 2.5% growth, albeit not what we would like for it to be. But yes, it is a 2.5% growth on the non-COVID volumes.
So Bharat, what would volume growth, patient volume growth in FY, what would you estimate? And given the better realizations, what would revenue growth overall look like in FY24? Would you be in double digits? Early double digits?
Our historical averages have been around double-digit number, and that is really what we are trying to get to. So this quarter's numbers really prove that we can get to a double-digit number. At 9.7-10% growth is what we delivered on the non-COVID portfolio. And as the base of COVID portfolio gets off completely in Q2, I think a 10% growth should really, double-digit growth should be really sustainable.
All right. Hi, good morning, sir. I want to ask you about Suburban. How is that shaping up? And also, there is a concern with regard to the margins out there. So how do you see the margin trajectory improve for Suburban? It's given you good geographical exposure, but on the margin front, there is some kind of overhang from a stock market perspective. Go ahead.
Wonderful, yeah. Suburban was acquired for building a large business in the West, and these businesses are built over a period of time. It takes 5, 7, 10 years to kind of build this up. Now, having got this platform, what we are really working on is putting the growth drivers. Last quarter, we launched a new thematic campaign in the city of Mumbai, which got us extensive visibility and patient feedback saying, yes, Suburban is now visible, what it used to be in the past. So we are investing in growing the business. There has also been a strong D2C campaign launched to acquire customers digitally and play the home collection route during this monsoon and fever season. Or vector-borne disease season. So that is something which we're trying to build the business. From a margin perspective, what we're really trying to do is to look at the synergies between Dr. Lal Path Labs and the Suburban ecosystem to be able to derive the maximum benefits possible. If you look at the infrastructure of Dr. Lal Path Lab and Suburban together, my estimate is in the region of West, Maharashtra at least, we should be number one from an infrastructure perspective. So the whole effort is now going to be saying, how do we get synergy between these two assets to be driving the growth in the Western market of the country? And that should start to fuel in the margin because we'll obviously harmonize quite a few systems here.
Okay. All right. That was about that acquisition. But sir, what about the cash in your books? You're sitting on some good amount as of now. Could you give us the updated number? I think it's around 800 crores approximately. And are you on the prowl again? Are you looking at some more inorganic growth?
Yes, if the opportunity comes right, and we are focused on building more business in South and West. So that is where we will really be looking at M&A opportunities, provide a right quality of asset at the parameters at what we set out to achieve really comes through. So yes, we are focused on driving the business forward, getting the top line, the patient volume, the margin mix right, which allows us to invest back in the business. And as an opportunities come, yes, we would be open.
But are you on the prowl? But in 2023, should we hear something?
We are currently focused on getting the Suburban acquisition fully integrated. I think this is going to take some time and effort. But in the meantime, if something comes up, yes, of course, that will be a different discussion altogether.
Sorry, just to round that discussion off with a margin number for the full year, would you be around this sort of 24 to 26 odd % for the full year, Bharat?
So yeah, from a margin perspective, we always said that we would like to get back to the pre-COVID margin level, which is about 26 odd %. And we feel confident at this stage that we should be able to achieve the 26% margin profile. Yeah, the pre-COVID margin profile, that should be definitely achievable.
That should be achievable. And for SwasthFit, which is now about 22% of your revenues, I think you did give us some numbers. On an annualized basis, what are you expecting to do?
We should run about 500 odd crores on SwasthFit. I think that is a good step up what we have built. And when you look back, I think it's been a very good journey on SwasthFit.
So you're expecting an acceleration because I think you did about little over 100 crores. So through the course of the year. We did 112
crores in the last quarter. We did 112 crores in quarter one. So I guess, we're not really driving it. It's the patient adoption which is happening. And we feel happy about that, yeah. But we will launch more variants of SwasthFit, more targeted, more sharpened portfolio that should provide more value medically for our patients.
Okay, Bharat, finally, speaking of launches, I think the guidance says that you will be adding, 15 to 20 more labs in the coming year. What is the overall plan for the year, both for Suburban and for the mother brand? And also just give us the sense of, cash funding and, how you're looking on the financial side as you roll these centers out.
Right. So the way we have kind of said is that we will grow in clusters to really support the hub and spoke model. So all our effort is adding new infrastructure, be it collection center, pickup points, or even our own processing labs in a cluster-based approach. Having said that, we are currently focused on building large amount of infrastructure in tier 3, tier 4 cities because that is really an underserved area. So all the labs we launched in quarter 4 of last year or quarter 1 of this year, or what we will do in quarter 2 of this coming year, will all be in tier 3, tier 4 cities of the country, spread across northeast and parts of, as we look forward to the second half, we will open some more labs in west and south as well. So we are really looking at building a cluster-based approach in tier 3, tier 4 cities across the length and breadth of the country. From a cash perspective, like we discussed, we are sitting about 700 odd crores of cash. And as and when we get a good opportunity to deploy the cash, yes, we'll definitely come back and update.
All right, look forward to speaking with you again soon. Thanks very much, Bharat, for joining us and running us through all of that detail. Thanks very much. Well, that's Dr. Lal Pathlabs with some outlook. The market's down 23 points, so it's largely sideways. By the way, market breadth has flipped a little bit, so more declines as compared to advances early on. So watch this one as well. Nothing new, at least not on the downside. RVNL, Piramal, Sona Comstar, HPCL, Motherson are some of the names which are coming up on the downside.
I just wanted to point out Reliance Industries. The reason that we have recovered from a negative 50 to a negative 20 points on the Nifty is Reliance Industries, that big point there, putting in a bit of a fight as we speak. So just thought I'd point that out.
Absolutely. That's picked up quite a bit from in the last 10 minutes or so. So that's the reason why the market's picking up. Well, we'll take a quick commercial break here. We'll be joined by the management of Sterlite Tech and CG Power, one after the other, to discuss their respective quarterly numbers. Stay tuned. We have Sterlite Tech up next, and then after that, CG Power. Stay with us.
Welcome back. Well, the Nifty is mildly in the red now as we speak. The bulls putting in a bit of a fight. Sometimes this expiry-related issue that played out yesterday, it keeps the markets a little bit more prepared for the bad news the next day, because yesterday we saw a slam dunk in the last 60 minutes or so. But it's earnings season, so let's get straight to the next management. It was a soft quarter coming in for Sterlite Tech. Revenue growth was weak. The order book continues to remain flattish, although margins expanded. The company has lowered their FY24 guidance to around 7 to around 9% from around 10 to 12 earlier. Ankit Agarwal, the MD of the company, joins us on the show. Hi, Ankit. Good morning. Well, you've lowered your guidance, but you're still sounding reasonably optimistic because 7 to 9% in comparison to 10 to 12%. So give us some details. How do you see this shaping up? And also give us a trajectory on margins from here on.
Hi, thank you for having me on the show. So as you said rightly, earlier we had looked at full year basis, we had looked at 10 to 12% earlier, versus now when we see the market and our conversations with our customers across Europe, across US in particular, we now see that we are now forecasting between 7 to 9% growth. As we had shared earlier as well, fundamentally, we continue to see quite strong demand, particularly for the optical fiber on the back of 5G, fiber to the home, and the hyperscalers. What we do see is that there is some inventory, particularly in the US market. And result of that, there is some period of time as that inventory gets depleted over the Q1 and Q2. We do see that we will see improvements in our sales volumes, particularly in US and also to a smaller extent Europe, as we get into second half of this year. So on the back of that, we found it prudent to look at the guidance, and we've reduced our guidance accordingly. In principle, we are also looking at how do we scale up in other geographies, particularly in India, where we do see strong demand continuing on the back of 5G. And probably towards the end of this year, we should see some demand coming on the back of BharatNet kind of projects.
Ankit, hi, good morning. Prashant here. What does this mean for, so it's an inventory issue, as you explain it. Otherwise, demand trends remain pretty strong from a longer term perspective. But what does this mean in terms of pricing, what you're able to charge, and then margins for the full year?
Yeah, absolutely, Prashant. So as we shared, so our margins have been healthy. We've actually taken a very strong look at our costs and looking at our cost to serve our customers. Definitely, there have been areas where we continue to focus and improve our efficiencies. We've also seen now some of the logistics costs come down and some of the raw materials have stabilized. So we are looking at all the elements of if our volumes come down, which we have seen in Q1, we may see it continue in Q2. We are taking several measures to reduce our costs as well. So to that extent, we are holding on our margins. Currently, the price realizations continue to be stable, but we may see some of that coming down in Q2 and maybe partly in Q3. Overall, we are still looking at how to continue our profitability, particularly in our optical business, which is north of 20% EBITDA margins.
Okay, got that, Ankit. So, let's now just talk about the overall growth picture. As you're mentioning, at least on the volume side, there's not much problem in the optical fiber business. Let's talk about services as well, where I think the stated intent is to, be a little more selective in the kind of contracts that you execute, the kind of works that you execute. And I believe that you were expecting a pickup in the UK markets. So talk to us a little more about services. And in terms of the revenue pie, FY24, how much will come from both of the segments?
Sure, absolutely. So at a macro level, we are in the business range of around 6,800, 7,000 crores if you look at last year. And so broadly about 1,700 crores of that came from the services business, and largely the balance came from the optical business. So from a split perspective, probably that kind of ratio will continue. What we have guided specifically is that we are very focused on taking certain projects at the right margin level. So that discipline is definitely now in the business, taking business at the right margins, right kinds of customers, and most importantly, ensuring that the cash and the fund involvement improves. So that's the focus that we're doing, as we guided yesterday as well, particularly in some of our government projects where we are now looking to hit certain milestones. We do believe that probably by second half of this year, we do see us hitting some of those milestones and generating more cash. Broadly, we have moved from a range of about 3 to 4% margin to closer to about 7 to 8% margin. So that's something that we'll continue to drive going forward. One big trigger clearly will be, BharatNet kind of projects where there's about 80,000 crores spent by the government, and STL will look to play a leading role. Similarly, NHAI has now talked about anywhere between 10 to 20,000 kilometers of highways being built, where there will be a fiber core at the heart of those highways. So some very interesting projects that are coming up in India as well. We will be very selective in which of these we pick up. On the UK side, there has been some consolidation of the internet service providers in the UK, which has led to some temporary reduction in deployment in the UK. So we continue to be bullish on the UK, but I think when we look at Q1, there was some slowdown. We see that probably picking up by certainly by H2 and probably by Q2 itself.
All right, Ankit, so we've got a fair idea about the operational performance. What's the updated debt number and reduction plans from here on?
So broadly, we've been at a flat level of debt in the range of around 3,200 crores net debt. And we continue to, while we talked about our revenue guidance going 7 to 9%, we continue to maintain a target of going to net debt to EBITDA of 2.5 times. So as we said, our focus on the business is now to clearly generate cash and to reduce the debt going forward.
Ankit, just a question on the margins, because from what you described, on the optical fiber side, pricing may come off a little bit. But on the services side, you're very focused on winning high margin orders. So net-net at a blended level, you're at 13.4% roughly right now at the end of Q1. What's the margin outlook? What's the range that you'd like to see the company at?
I wouldn't be able to give a specific number, but I think definitely, as I said, on optical side, we want to maintain EBITDA north of 20%. And we want to specifically look at services margin being north of 8% and eventually take it to 10%. So that's clearly a priority for us. And the second one is to look at the cash generation across the businesses and reduce the fund involvement.
Okay. Speaking of funds, just want to check this. I believe that you're planning a rights issue as well at some point this year. Can you give us some more idea if you are looking to raise any further money? What could be the size, quantum, and why would you want to raise more equity?
So as I said, firstly, our target is to take the net debt to EBITDA to 2.5 times. That currently does not factor a rights issue. That is through our cash generation of the business. We are continuing to evaluate the opportunity for the rights issue at probably the right market conditions and looking at the business requirements. We'll continue to evaluate that.
Ankit, we'll leave it there. Thank you very much for joining us. And it's always a pleasure having you here on CNBC-TV18. That's the management of Sterlite Tech. Stocks absolutely flat this morning. Well, lots of stocks, interesting stock moves. And I just want to take note of two names. One is, if you can put up RBL Bank, that is now moved to the high point of the day. It's up 4%. This is, of course, our story, our exclusive story, which, of course, got confirmed. Not RBL Bank. So that's 242 on that one. And look at Kajaria Ceramics after that. Numbers came out recently. I think there was a call, but the reaction is coming through this morning. That's up a full 6% now, Kajaria Ceramics. So two names there. Well, let's move on. We've got the management of CG Power joining in. It's been a very good performance from the company. Revenues are up 13%. EBITDA is up 38%. Margins have expanded almost 300 basis points. And order intake is looking pretty healthy as well. Mr. Natarajan Srinivasan is Managing Director and CEO at CG Power. He's joining us to take some questions. Mr. Natarajan, good morning. Great to have you with us here. Thanks very much for your time. The power segment especially has seen a significant uptick in terms of order intake. Can we start there? I mean, is that segment looking very buoyant? What are your expectations for inflows for the full year in this segment?
I think the power segment, as of now, the order book, unexecuted order book, is about 2,820 crores, of which the transformer is actually about 1,730 crores. As I mentioned earlier, there is a significant investment which is going into the power sector. So demand for both for switchgear and transformer will continue to be high, and not only for us, I think for all the players. We have capacity constraints to take more. This will take about 12 to 14 months to execute. But order flow is strong, and then inquiry is more than 10,000 crores. Inquiry is more than 10,000 crores, which means potential projects which may be put together. Okay, deal pipeline. Deal pipeline, yeah. And you said you have, that's a good problem to have, constraints to take in more orders. So how does that get resolved? I mean, in terms of capacity expansion, etc.? So we have already announced an expansion whereby our capacity in the power transformer will go from 17,000 MVA to 25,000 MVA. But even that will not be adequate. We are looking to see whether we can look at some acquisitions. Many opportunities are available.
Okay. Sir, you mentioned that there are order inquiries to the extent of almost 10,000 crores. Is this more on the power side, or are you also factoring in all the industrial orders that you're getting? And give us a sense between power and industrial, where do you see sort of a bigger buzz and heightened activity, ordering activity?
No, the number I mentioned is only on transformer and switchgear, substantially relatable to the power business. Power.
Okay.
It could be renewables. It could be renewables or solar, or even fossil fuel. All these put together.
Okay, so power is looking very good. You have lots of inquiries lined up. Give us a sense on ordering on the industrial side, because even that business, I mean, in terms of revenue, even that business has seen a decent growth, and that's the lion's share of your revenue right now. So what are the different industrial clusters telling you? What's the outlook for the rest of the year?
So you are talking about industrial segment?
Yeah.
So industrial segment, we report to both railways and motors, and motors are expected to grow in double digits, and almost all the segments, no individual particular industry is actually having a concentration. Water, sugar, ethanol, infrastructure, all are actually firing. So each one probably is growing about 7 to 8%.
Okay. All right. Hi, good morning, Mr. Srinivasan. Two-part question I wanted to ask you. Railways, there's obviously a big push out there and a great potential as well. So as a percentage of your business, what is it and where is that headed? And since we just spoke about motors, LT, HT motors as well, what is your market share and have you gained out there?
So in railways, actually, we do about close to about 1,000 to 1,200 crores annually. And there are opportunities, huge opportunities in railways, but on the project side, primarily in the upgradation of locos and Vande Bharat trains, etc. So those areas, unless we are able to tie up with a player who has got the experience and eligibility criteria, we will not be able to directly participate. But we are also looking at opportunities whether for some subcontracting jobs in respect of those who already have got some orders. So this year also there are some orders are likely on the Vande Bharat side. We are talking to some people. But as of now, nothing has been formed up, so we are not able to see anything more. So coming to your second question on HT motors, that is what we call industrial motors, our market share is about 16%, whereas in the LT motors, our market share is about 35%. The LT motors is growing. There again, we have some capacity constraints. We are taking some steps to expand the capacity. I see our market share probably from here onwards to move to about another 3-4% by end of this year.
In which segments, sir? In both the segments, or
in LT motors, I think we are 35%. That will continue to retain that share. In the HT motors, from 16%, probably we can move up to 20%.
Okay. And just to go back to that earlier point in switchgear and transformers, you said capacity expansion is on track, but that won't be enough. You'll look at some acquisitions, etc. Anything we should expect soon, sir?
So not really, I think, because as of now, nothing is formed up, but we are constantly on the lookout.
Okay. This is largely going to be in the unlisted space? Smaller capacities?
Everything is open. So we get some proposals every now and then, but as and when it's finalized, probably I'll be able to
You want to tell us about the size?
No, nothing is formed up. I cannot say anything.
Mr. Srinivasan, you can tease us a little bit.
I think he is teasing.
Yeah, we know you're on the prowl. Just tell us the size. What is the size of the acquisition?
No. Everyone will be interested today because the industry has got so much of demand. So it will be a lot of competition. We have to wait and see.
But it's 100, 200, 500 crores, more than that?
Don't ask me anything more. I'm sorry to say.
I tried my best.
Okay. So, last time, I think, on the last call after the last quarter Q4 earnings, you had said that margins will be at around 14% for this year. Now, considering the strength in the business, and as you mentioned that, the ordering activity has really picked up, do you think there's a scope to improve that margin guidance at all? And also just tell us about the expectation on order book growth on both sides, power as well as industrial. If you could give us a number of the order book growth that you'll see on both sides.
So as first as regards margins, 70% of the cost of production is way of material cost. We have mainly copper, iron, steel, aluminium. So I think if these prices move, definitely we will not be able to maintain margins. So as of now, we are not expecting any significant volatility in these prices. There is volatility, but it will not be, as of now, it is maybe controllable or manageable. Therefore, we will be able to maintain this margin. Beyond this, I'm not sure they'll be able to increase the margin because, these are all tender-driven business. Railways is tender-driven, power sector is tender-driven. Therefore, you have to compete and get the order. As far as motorists is concerned, the kind of competition from very large players. So there is very little scope for you to increase the selling price the way you want. Therefore, I would be happy to maintain this margin at this level. Coming to order book, order book as of last year, 30th June of last year was aggregate order book was 3,500 crores. It has grown by about 40%. As of this June 2023, I think order book is close to 5,000 crores, 4,909 crores to be exact. And the inquiry is further strong. So therefore, I don't see any problem in order book. It's a question of execution.
Okay, all right. Final question then, sir, before we let you go. For the year, for the entire business, margins you're going to maintain. What kind of growth are you looking at? And a couple of sell-side notes, they are highlighting that exports could be big potential. Currently, it's not too large. So could you tell us about that? Do you see a large potential? Do you have a ballpark number for exports in mind?
See, for the year as a whole, as I maintained last year, our targeting to go about 15%. And this quarter, actually, we lost about 40-45 crores of sales due to our internal, also some cyclone effect, etc. Otherwise, target is to maintain grow the top line by 15% for this year, I think. So given the order book is definitely there. So if we execute, definitely we will able to reach there. As regards your second question, exports, unless and until the domestic demand is so strong, unless and until you have a sufficient capacity, we will not be able to go bigger on exports. All the segments, three segments, actually the domestic segment is very demand is strong. We are struggling to meet the demand domestically. While we are taking steps to seize the market and then pick up upon dealers, customers, etc. When we probably our capacity expanded capacity comes into force, that we will be able to affect maybe next year and year after.
Mr. Natarajan, it's a pleasure always speaking with you, sir, and we look forward to having you back on soon, and of course around the time that you announce that acquisition as well, whenever that is. Thank you very much for joining us here on CNBC-TV18. Thank you. Well, the markets actually moved into the green, so that is that's interesting to note. Let me just take a quick look at what the day's low was. Pretty close to yesterday's low. The low is 19,598. Yesterday we got to 19,603. So similar lows, and then there's a bit of a bounce. Ajanta Pharma is the big mover, 6%. Good earnings. Ekta is here to shine a spotlight on once again. Ekta.
Well, yes, it's a good performance for Ajanta Pharma. The revenue is up around 7%. This is better than, or largely in line with expectations, but the EBITDA has come in better than expectations. So the margins have come in at around 26.6%. The street was working with around 23% for the quarter, and that has resulted in a better profit, which is coming at around over 200 odd crores. The street was working with around 163 to 165 odd crores. Now, a couple of key points that stood out is that geographies such as India has shown double-digit growth, so it's up 14% year on year. US has reported an over 200 crores in terms of revenue, so that's up around 19%. The company has also turned 50 years old, so they've approved their first interim dividend of around 315 odd crores, regular dividend of 10 rupees, special dividend of 25 rupees. Just a couple of key points from the conference call. They maintained a guidance of 25% in terms of margins for FY24. They've guided for mid-teen year-on-year growth in branded generic segment, and they indicated that for price erosion, it's much better than earlier. So that's definitely a positive. Mid-single-digit growth in the US is expected. This is excluding any benefit from a non-smoking drug called Shantex generic. So looking good for Ajanta in terms of guidance as well.
Okay, got that. Thanks very much. It's quite the mover today in terms of earnings reactions. Thank you for that, Ekta. Well, let's actually take the conversation forward on pharma stocks, and then this is a big sort of surge that we've seen. Nithya Balasubramaniam, Director of Healthcare at Sanford Bernstein, is with us. Nithya, good morning. Thanks for taking the call. So it's been, lots of green cheer thanks to these pharma companies. I want to get your sense on the takeaways. Look at what Cipla said about the US market and the strong growth that they posted there. Even Ajanta, they're talking about how a lot of the price erosion is coming off to now single digits. your sense on what we've seen, and if one is to take a call on US generics, A, whether you'd go for that, and then B, which would be the best play for you in terms of the stock choice?
In the near term, I do believe price erosion is much softer than before. I think we've spoken about this compared to last year, where price erosions were trending in the 15 to 20% mark. I think it's much softer at about low single digit this year. And I would imagine that sustains at least for the rest of the calendar year. It's difficult to say whether this will sustain beyond that in a longer time frame. But beyond that, I think the sector is also seeing additional tailwinds in terms of companies finally being able to take advantage of API costs having improved, API and raw material costs. A lot of them are sitting on high price inventory. I think they've burned through that, and now they're enjoying the benefit of API costs having come off to pre-COVID levels. Freight costs are more reasonable. And for companies like Cipla and Alchem, which have a higher NLEM exposure, they've also been able to take a 10 to 12% price hike this year. So I think across the board, the theme right now seems to be better margins this year, both gross margins as well as EBITDA. And in terms of what we would play, I think in terms of our 15 to 1 year to 15-month view, we'd still like Sun, Cipla and Biocon. But specifically, if you're asking me about the US tailwind and names to play there, I think Aurobindo is more exposed. There are also some supply disruptions. So in the near term, I think Aurobindo should be able to benefit.
Hi, Nitya. Good morning. Nitya, in the top few stocks that you mentioned, Cipla featured. Yesterday, my colleague Nisha, she broke the story that finally there could be a stake sale that could be on the cards. Wanted your comments on that. We've heard it before, but it seems there's something brewing now.
See, I think the promoters, Yusuf Hamid and Mustafa Hamid, are obviously in a place where they need to think about succession planning. Samina Hamid has been involved, but not in an operational role. I think in the recent past, we have seen that Umang Vora had operational control. And I would imagine going forward, they want to continue to have a professional management in place. What's broken so far, I'm not privy to details, but based on what's in the press out there, it seems like they're trying to sell about a 25% stake out of the 34% that the promoters hold. To possibly a consortium of private equity. So we would imagine that when any private equity or a consortium comes on board, we would imagine that they would want to continue to run the company through a professional management. It's worked well for Cipla in the recent past. I don't see why it should be very different if a consortium of private equity were to take over.
Okay, so operationally, you don't see any hiccups. I guess the market anyway gets excited if someone's going to come in and buy a large chunk of equity, open offer, all those kind of buzzing scenarios will start doing the rounds. So I guess explains a lot of the excitement, both on fundamentals and some of these other possibilities around the stock. Thanks, Nitya, for joining in. A short call, but a very useful one. Thank you for giving us the perspective. We need to take a very, very quick break. On that note, on the other side, the latest on commodities as well as the top trading ideas now at 10 o'clock. Welcome back. Well, the markets have been pretty iffy. It's all over the place. Suddenly, we are starting the southward journey once again. And you have a couple of the banking and IT names to blame for that. ICICI Bank, HDFC Bank are big drags, as is TCS. Okay, let's go to Mitesh. Mitesh, anyway, you were saying that you are more keen on looking at stocks today. But this whole flip-flop on the index, would you trade anything at all? Nifty, Bank Nifty?
I think, Surabhi, the Bank Nifty is clearly underperforming, and that's where the intraday charts are also on the weaker side. So buying into Bank Nifty puts, unless until the spot starts getting past 45,800 again, could be a good idea. And I think on the lower side, I would be looking at a test of 45,000 and in the worst case, 44,600. So I think there's a good chance of us heading towards 44,600, which is roughly about 800-900 points lower from here. So I think the Bank Nifty over the next 2 days will be under pressure. Even on the stock side, I have a sell call on Axis Bank. It's a conditional sell. I'm just waiting for that level of 945, 944 to be taken out, and we have had a low of 942 today. So let's keep it like this. Sell below 942 with a stop at 953. Look for targets of 920 there. And on the buying side is NTPC, which I would recommend buying with a stop at 199.5 for targets of 208.
Okay, got that. Desh, thank you very much. We'll come back to you during the course of the day. Let's now look at commodities as well. And we have Manisha Gupta in the house for exactly that. Manisha, what do you have your eye on?
Well, metals, because, the last couple of days were positive. We saw some buying coming in, but that clearly has turned in the New York session yesterday with two global central banks putting up rate hikes and the dollar index back up again, 101. We are looking at pressure here. Add to that the fact that the China stimulus has still not come and the demand from China remains on a muted side. Also, when you look at inventories, those seem to be gaining. So when you look at copper, we have seen production increase and the inventories also gain up. So in the year 2022, between the first 5 months of the year, we saw a deficit of 74,000 tons there. Now, in 2023, we have turned that into a surplus of 287,000. So we are sitting on much higher inventories at this point in time. Also, when you look at the surplus estimates itself, so while for 2023, it's 100,000. In 2024, that is expected to increase to 188,000. So the next 2 to 3 years, a lot of copper projects are expected to come online, and that would mean more supplies coming into the market. And copper is not the only one. That's exactly what we are looking at in other metals as well. Aluminum, for example, well, the prices have seen a decline of nearly 5% in this year. And from the highs of 2023, we are 15% in the negative from there. Here as well, when you look at the supplies in the global market estimates there, well, 2023 is staring at a deficit of 191,000 tons. But next year, that is expected to go half or less at 66,000 tons. So we are looking at more supplies increasing in aluminum as well. Nickel continues to be an underperformer in the sector. It is used in steel and in EV as well, but the prices have seen a decline of 27% in this year. There is rise in Indonesia output, and that has been weighing onto the markets. Here as well, to begin with, we are in surplus. So this year, the surplus is seen as around 200,000 tons. Next year as well, there would be a build-up on that. So 150,000 tons of a surplus next year as well is what you can see in nickel. So even with all that EV demand and energy transition, many of these metals are expected to be in surplus this year and the next as well.
Okay, got that. We'll watch out for this. Thank you very much, Manisha, for all the details. By the way, I just want to leave viewers with the key levels to track once again, because we briefly went below the 19,600 handle, and we're once again precariously close to those levels right now. The next level to watch is going to be the 20 DMA on the Nifty, which is closer to the 19,550 mark. So let's see how this goes. Banks are where the problem is. The Bank Nifty is at the lows of the session. HDFC Bank, ICICI Bank, Axis Bank, all of these stocks on the lower side of the screen. So banks are weak, as are some of the other names like Tata Steel and Hindalco. They had a great start to the week, some of these metal stocks, but right now they are cooling down. Reliance is actually the key support for the market, and if anything shifts over there, then the Nifty could have a bigger problem. So that's the setup, at least for the time being, at around 10 o'clock. We'll take a break on that note. On the other side, we'll have Lata joining in, and she'll connect with Puneet Chatwal of Indian Hotels to discuss the company's first quarter performance.
Welcome back. We stick with corporate results, and it was actually a good performance from Indian Hotels. It's a huge 30% improvement in the profit and about a 16% rise in EBITDA as well. The reason why we could call it mixed is if you compare it quarter on quarter. Fourth quarter is always the strongest for the hotel industry. It was for Indian Hotels, and so if you compare with that, the occupancy looks like, about 0.5% lower. But we have the man of the moment with us, Mr. Puneet Chhatwal, Managing Director and CEO of Indian Hotels. Good morning, Mr. Chhatwal. Always a pleasure having you with us. Well, it's a strong year-on-year rise in occupancy from 70.4% to 74.7%. But you spoilt us with an ultra 75% plus occupancy in the fourth quarter. How do you see it now with the events lined up for the year?
I think, firstly, thank you for having me. The seasonality in the business is there to stay. I think Indian Hotels or any other hotel company cannot change that, especially with a diversified portfolio like we have. So just a correction, Q3 is traditionally the strongest. Q4 is the second strongest. And if you get Q1 as a good start, I think then you're in for, you're ahead. Normally, if you go back 5 years, 7 years, 10 years, Q1 and Q2 have not been profitable, definitely not for Indian Hotels. So I think if we start on a good note, the Q3 and Q4 can only augment the performance of Q1 and Q2.
Okay, you must have been seeing the benefit of the revenge travel that we saw after COVID. What is your estimate of consumer sentiment now? Does it remain strong? You may already have pre-bookings for up until Q3 as well. And then you have all those events, beauty pageants and, test matches. How are you estimating? Do you get back to 75 plus?
Yes, so let me say, number one, consumer sentiment is strong. The sector, besides being hospitality and food and beverage driven, is now slowly also becoming a more consumerism driven sector. That's number one. Number two, demand remains strong and is continuing to outpace supply, which is going to stay constrained because of COVID. Not much construction of new hotels happened. Third, the infrastructure spend that the government is doing, especially opening of places like Pragati Maidan day before yesterday, as well as Dwarka or Jio in Mumbai, is going to create new demand, which we have not seen in the past. Fourthly, I think from our point of view, we have embarked on a journey of a very strong growth. We have 79 hotels in pipeline. We've opened 5 hotels in the first quarter, signed another 11. So I think our guidance has been we'll open 20 hotels this year. So the not like-for-like growth through both asset management initiatives of our renovations, smart renovations of existing assets, coupled with the not like-for-like growth, should drive both operating leverage as well as the EBITDA margins going forward. So all in all, we are pleased, and last not least is the introduction of new concepts, is the collaboration with Tata Neu, which is also helping us a lot in the last few quarters. So I think that loyalty-driven revenue has increased for us. Our new F&B innovations has helped us. And as I said, our smart renovations and ancillary businesses like private membership club, like a Chambers, the renaissance of the Taj Club lounges is all helping us to drive premium performance and quarter after quarter delivering the best quarter.
Okay. Oh, that's good to hear. Let me take one by one. You spoke about consumerism and the range of products you're offering, and you spoke about costs a wee bit. Tell us costs. I mean, that obviously could have impacted a bit since costs have gone up. Even your personal costs have gone up a bit. Is this just a one-off? And do you think revenues will beat? How will margins, how will costs progress from here on and therefore impact on margins?
We have given a guidance of 33% margin, and in our capital market day, a lot of questions came that if you've done almost 31.8 in last financial year, should that number not be higher? And we said no. We're going to invest in our businesses for future, and we rather have a larger top line and a 33% of that than to have a cost-driven model only. So the idea is to improve the revenue to the extent possible and optimize the costs. And we have been spending monies on marketing for our new businesses like Cumin, like Ama, and we also call Ginger as a new business. And we are very excited to look at the launch of Ginger in Santa Cruz. Depending on the monsoon and the strength of the monsoon and when it subsides, I think target date is 1st October, but latest would be 1st November. And that's going to be our flagship in this new business. And, we will be spending monies for marketing and other expenses related to it. Same thing on personnel. I think we tend to forget that last year in the Q1, it was immediately after the third wave was beginning to subside, which was popularly called as the Omicron. And the cost base was different. I think if you have a year like the sector has had last year, including Indian hotels, and some of those wage settlements with the unions, some of those increase in employee capacities to support new businesses is a given. And I think still boasting of around 30% margin, which includes international business, because on standalone, we are already at 36, even in Q1. I think for hotel sector, that's a very, very high margin. It's a global benchmark almost. Not many companies could boast of 30 plus percentage points on a global basis.
Yeah, anybody who makes a profit of 1 rupee over every 3 rupees they earn is doing a damn good business. I'm not taking away from that. But, Oliver Twist always asks for more. Time permitting, I'll come to international expansion. But let me ask you about Taj Sea Rock. Have you figured out how much investment you will need to make and you will make?
Well, Sea Rock, we are in the process of getting permissions. And for all the reasons we all know, it just is getting a bit delayed. And we remain optimistic that by the end of this year, we will have the preliminary permissions that are needed. The management's focus is there because this is one of the biggest hidden potentials that we have in our portfolio, and maybe one of the last big issue that remains to be resolved. So we are working on it. We are on the drawing board. And we are in continuous exchange with the authorities, whether it is a BMC or MCZMA and hopefully very soon with MOEF to get the permissions. So that focus is there, and hopefully we will have a solution as soon as possible.
Okay, so now to the international expansion. First of all, when do you expect to be profitable? Is it profitable in FY24 itself? And what are your big plans, if any, in the international sphere?
Oh my God. We are profitable on international business. The question is how we report it. So some of those businesses, the management fees that we earn, for example, in Dubai, come straight to IHCL for a variety of accounting reasons. If we were to add all that back, international business is very profitable. Also in Q1 of this year, it has been profitable despite a challenging situation in San Francisco, which is beyond our control. And also some challenges we still have in our hotel in New York. But London has performed very well. Dubai, our management fee income has been very good. Maldives has been still going fine. And Sri Lanka is beginning to come back. So I think on the international front, on the existing portfolio is all good. Cape Town is doing very well, and so has Lusaka performed for us. Now coming to the pipeline. In the first quarter of this year, we added 2 contracts in Dhaka, which is for both a Taj and a Vivanta. So I think on the Indian subcontinent, that was an important capital city that we were missing. So in a few years, we can expect that to open. And we have already communicated all the improvements we have made in London, including taking our very famous Chinese restaurant concept called House of Ming, which opened in April in London and has been off to a great start. So I think that's where we stand. As per the changes in LODR as of 15th of July, we had to report an in-principle agreement we got for acquiring Lusaka, which we've been running for almost 4 decades. I think that's another opportunity, just like we did Cape Town at the peak of COVID. And we are not investing, but if we get a rent agreement, or it's called a lease agreement for a property in Frankfurt, I think that would be an addition of another strategic dot on the European continent.
There's so much to chat, Mr. Chitwal. I will have to invite you in between results seasons, so I'm not bothered by the numbers and look for more details. Congratulations and thank you very much.
Please don't hesitate to invite me.
All right, sure. Certainly not. Thank you very much indeed for joining us. Out of time on Bazaar, just wanted to add that the Bank Nifty is the one that's giving a lot of trouble, and that's directly related to what the BOJ has said, that they will allow yields to rise a little bit. So Indian yields have gone up, and that's impacting the Bank Nifty. Wrap up on Bazaar. Chartbusters up.